Critical Mountain Pictures presents the Forex video training series, Blue Belt course, Introduction to Pivot Points. Professional traders and market makers use pivot points to identify potential support and resistance levels. To place in simplest terms, a pivot point and its support and resistance levels are areas at which direction of price movement can possibly change. What do you think the reason is behind pivot points being so strong? It is because they are objective. Unlike some of the indicators you have just learned, with pivot points, there is no discretion involved. In many ways, pivot points are very similar to Fibonacci levels. Because so many traders are looking at these levels, they usually become self-fulfilling. The major difference between the two is that with Fibonacci, there is still some subjectivity involved in picking swing high and swing lows. With pivot points, traders typically use the same method for calculating them. Many traders keep an eye on them, and we think you should too. Pivot points are especially useful to short-term traders who are looking to take advantage of small price movement. Just like normal support and resistance levels, traders can choose to trade the bounce or break of these levels. Range-bound traders use pivot points to identify reversal points. They see pivot points as areas where they can place buy and sell orders. Breakout traders use pivot points to recognize key levels that need to be broken for a move to be classified as a real breakout. Take a look at the example of pivot points plotted on the chart. As you can see here, horizontal support and resistance levels are placed on the chart. And look, they're nicely marked out for you. How fucking great is that? A quick rundown of what those acronyms mean. PP stands for pivot point and is the gray line. S stands for support and is the red lines. R stands for resistance and is the green lines on the chart. The first thing you should learn is how to calculate pivot points. The pivot point and associated support and resistance levels are calculated by using the last trading session open, high, low, and close. Since Forex is a 24-hour market, most traders use the New York closing time of 4 p.m. Eastern Standard Time as the previous day's close. The calculation pivot point formula is shown here. Support and resistance levels are then calculated off the pivot point, like so. The second level of support and resistance formula is here. And the third level is here. Keep in mind that some charting software plot intermediate or midpoint levels. They are basically mini levels between the main pivot and support and resistance levels. If you hate math, have no fear, because you don't have to perform these calculations for yourself. Most charting software will automatically do this for you. Just make sure you configure your settings so it uses the correct closing time and price. In the next lesson, you'll learn how to incorporate pivot points into your trading strategy.